We're back with our featured guest, Peter Schiff, president of Euro Pacific Capital. Peter, you've been very vocal about what some of the problems are with the government's plan, where the U.S. economy is going. What about the fact that come January there will be a new administration in the White House? Do you have any sense of optimism that there might be some change?
None whatsoever. I mean, there might be some change only to the degree of magnitude that the government interferes. You know, the problem is they've misdiagnosed the disease. Everybody assumes, or at least certainly everybody in the Obama administration is going to assume that we're in this mess because of capitalism, because of too much greed. And they don't understand the government's role. The reason for all these bad decisions, the reason for all these bad loans was not the free market. It was government interference in the free market, right? It was the government, the Federal Reserve, that set interest rates down so low. That's the source of all the cheap money. It was Fannie and Freddie that guaranteed half the mortgages, which created the moral hazard, which allowed people to borrow beyond their means because people knew the government would step up, and you had a tax code that promoted real estate speculation.
What about the idea that we're going to get more regulation in a new administration?
We're going to get more regulation, but it's going to be more regulation that interferes with the market trying to correct from all the problems that were created during that phony boom. This is exactly what Herbert Hoover tried. It's exactly what Franklin Roosevelt did. And that's the reason we had a Great Depression.
Well, we didn't have credit default swaps back then.
But we had a malinvested economy. We had a credit bubble that was the result of monetary policy by the Fed. They blew up a stock market bubble. It burst. We were going to have a very severe recession or a 1 or 2 year depression. But the government turned it into the Great Depression because they interfered with prices, because they propped up failing companies, because they tried everything they could to ease the pain. And that's exactly what Obama's going to do. He's going to come in with a big mandate for change, to rein in capitalism. They're going to spend a lot of money we don't have. They're going to go deeper into debt. They're going to crank up the printing presses. They're going to tax the very people that we need to help dig our way out of this hole, the people who might actually provide legitimate employment opportunities and produce products. We're going to have massive unemployment. We're going to have rapid inflation, and our economy is going to tank.
You're an upbeat guy. You know that, Peter.
Well, I'm just looking at what's going to happen and not sugarcoating it.
Let's say we elected you president. What would you do?
Well, I mean, first of all, there's no panacea, right? There's nothing that we can do to immediately ease the pain. You know, we borrowed and spent ourselves into bankruptcy, and now we've got to deal with that reality. But what I would like to do, if I was in charge of the government, is the one thing the government can do to make the pain more bearable is to shrink its size, so that the government itself is a smaller burden on society. So what the government should be doing is cutting spending. It should be cutting military spending. Maybe we can bring our troops home from around the world. We can't afford to maintain this empire. We need to slash entitlement spending. We need to abolish entire government departments and agencies. We need to get the government a lot smaller, so then we can actually cut taxes and people won't have to support this gigantic government.
Politically, how are you going to cut entitlement spending, including Social Security, when people are looking what happened to their 401ks?
Well, I realize that it's difficult, but if we don't cut entitlements, the entitlements will be worthless, because what's going to happen is people are going to get their Social Security money and it's not going to buy them anything, because we're going to have massive inflation. So what good is it to get a Social Security check if you can't buy anything with it? It's better for the government to tackle the problem now, make real cuts in Social Security, and then if there are any payments to people who really need it, the payments will have some value.
And you think the dollar's going to go weaker from here?
Yeah, I mean, right now, this perverse dollar rally as a result of all this deleveraging, as a result of all the redemptions. But once this rally runs out of steam, and it will run out of steam,
right,
the dollar is going to drop like a stone. And then the problems are really going to get worse.
We're back with Peter Schiff of Euro Pacific Capital. Peter, I want to talk strategy a little bit with you right now. If you took your own advice, right, and avoided investing in the U.S., you had to put your money somewhere. You don't like cash if we're going to have inflation, right? So as an investor, what do you do in this time of uncertainty? I know you've written a couple of books on it.
Yeah, well, I wrote two. The first book I wrote was called Crash Proof, which came out in early 2007. And I just followed up on that book with a book that just came out a few weeks ago called The Little Book of Bull Moves and Bear Markets. Now, basically, the strategies that I outlined in both Crash Proof and in the Little Book right now are actually not working, right? My strategy was to hold cash, a lot of that cash being in foreign currencies. Some of those currencies are doing well, like the Japanese yen, but other currencies like the euro or the Australian and Canadian dollars have fallen. All of this really in the last few months. Own precious metals. Now, since I wrote my original book, Crash Proof, gold prices are a lot higher, but they're quite a bit lower than they were 6 months ago. Same thing with commodities in general. And I also recommended buying foreign stocks, and I knew we had to get out of the U.S. market. And I recommended buying dividend-paying foreign stocks. All of those types of stocks that I recommended, which were doing very well probably from 2000 to 2007, have collapsed this year. And foreign stocks are way down. The dollar is up. But I think this is very temporary. I think this is a fire sale going on due to deleveraging. I don't think these prices are going to be here for long. I don't think the dollar is going to hold these gains. It is a great opportunity for people to implement the strategies in those books right now to get out of their overpriced U.S. stocks, to get out of the dollar, which is going to collapse.
So buy foreign stocks.
Yeah, I mean, there are stocks now at 2 and 3 and 4 times earnings. Stocks are cheaper in Asia than they were at the depths of the Asian economic crisis. You can buy incredible dividend yields right now, and you can get rid of the dollar at exchange rates we haven't seen in years and that are not going to exist in the future.
But aren't the Asian economies also going to feel the effects of what's happening in the U.S. and elsewhere? Today, I want to point out the Baltic Dry Index dropped below 1,000 for the first time in 6 years.
They're going to feel this temporarily. Remember, we're broke. They were the major lenders of money. They supplied us with credit and goods. We're broke. We can't pay them back. This is causing financial problems as Asia has to absorb these losses. But going forward, when they cut us off, when they stop lending us money and supplying us with goods, their economies are going to boom. There is real economic growth going on in Asia. There are real factories producing real products. People are saving their money. There's a real economy there. And what's going to happen is instead of shipping all their stuff to us, they're going to keep all their stuff, consume it themselves. Instead of loaning their money to us to blow it on consumption, they're going to invest that money productively at home. So after the dust settles, there's a tremendous boom that's coming. You want to invest in that. You want to be positioned for that. The United States, on the other hand, is going to fare much worse. Our phony economy that has been propped up by the rest of the world is going to collapse. And when Obama comes in, he's going to put several nails in the coffin. It's going to be a long time before there's any growth here.
The election is a week from today. It hasn't happened yet. You should just point that out a couple of times because you keep referring to the Obama administration.
Look, no one's going to vote for 4 more years of this. I mean, they're going to grasp at straws. They're going to vote for anybody who promises change. Unfortunately, the change that we need is less government. It's less interference. So we're not going to get change with Obama. We're just going to get more of the same, only worse.
Yeah, but look at Asia. It's managing to grow, and you could argue there's a lot of government interference there, depending on the country.
There's government interference everywhere. It's just a question of degree. And there's a lot more freedom. There's a lot more capitalism going on outside the United States than inside the United States. There's real wealth. I mean, look at all the stuff that we're buying. Look at all these products that are on shelves in America. How did they get here? There's factories around the world that actually made all this stuff.
Was one of our biggest mistakes losing our manufacturing base in the U.S.?
Well, of course. I mean, and the reason we lost it was because the dollar was the reserve currency, and we got lazy. We got to the point where we could just print money and export it, and the rest of the world sent us stuff. You know, when you actually have to produce things, it requires capital investment. It requires savings. You know, when you just consume, it's real fun. You know, you just spend your money. And so we developed this phony economy that was destined to collapse.
We don't have a lot of time left, but I've got to ask you about housing prices. S&P Case-Shiller Index down 16.6%. Again, another new low there. I'm going to doubt there's anything encouraging from you as far as house prices.
No, I mean, house prices have to continue to fall. You know, a lot of people think the problem is that housing prices are falling. We need to stabilize housing prices. That's not the problem. Again, that's the solution. The problem was that housing prices got much too high. They need to come down. They're still not low enough relative to what Americans actually can afford to pay for houses. So I think prices still have a long way to go on the downside. And unfortunately, these government bailouts that they have is going to encourage more people to stop making their mortgage payments in anticipation of a reduced mortgage from the government when the government buys their troubled loan from their lender. So I think we have a lot more downside in housing.
When you say long way to go, how much lower?
Well, I mean, you have prices now where, you know, houses are selling at 30% or 50% off their peak valuations, but you still have people looking to sell houses, and they put their houses on the market, and they put the house on the market, you know, at a price that's never going to sell. It's nowhere near where the foreclosures are taking place. The foreclosures are the real market. And when homeowners understand this, come to terms with this, and when lenders and banks come to terms with the foreclosure market is not an aberration, that's the market, that houses are worth half of what people think, you know, that's going to have a dramatic change on the way Americans run their lives, because people are operating under the fantasy that the house was the source of all this wealth when it's not.
Peter Schiff, have to end the conversation there of Euro Pacific Capital. Thanks so much for